Now, Capital Shopping Centres out with results today. Joining us now on the line is David Fischel, the CEO of the company. Thank you so much, sir, for joining us. We've actually seen dramatic growth coming through for the company. I know Trafford Centre being one of your star performers. We've seen an increase in feet as well across the board. You've also started to revise your estimated rental values. Take us over the period that was.
Yeah, no, 2011 was a great year for us at Capital Shopping Centres. As you said, the Trafford Centre acquisition has really transformed the business. It's taken us to a whole new level in the industry. The assets performed well. We had a £50 million revaluation surplus at the end of the year. So that was great. Also on the underlying net rental income, 3.6% like-for-like growth. That drove an increase in underlying earnings per share of 7%. And most of the key indicators that we look at, looking strong and stable. So we've got occupancy at 97%. Footfall was up 2% for the year. New lettings last year, increasing the annual rent roll by £9 million. And a whole lot of new faces, new retailers coming in, 33 new brands introduced into our centres last year.
So, David, I mean, also just looking at your most recent acquisition, looking at Broadmarsh as well, what kind of impact is it actually going to have on the business going forward? It seems that you've done a fantastic job in ensuring that you do attract the right retailers and you are actually bringing in the right rentals as well. So, in a very difficult economy, you are managing, perhaps some would argue, the impossible.
Well, it's certainly a difficult economy, and the risks for us continue to be tenant failures and lease expiries. But I think we're coming off a good base with 97% occupancy. Nottingham, which you mentioned, is a great opportunity for us. It's a top 6 city in the UK. Nothing's really happened in the city retail-wise for about 20 years because there's been a stalemate between the Victoria Centre, which we owned, and the Broadmarsh, which another developer owned. We now have an opportunity to put an end to that and upgrade the quality of the retail offer in the city, which I think is a really exciting prospect for us.
Well, let's also touch on Chapel Field as well. That's been open for around 3 years, just before the downturn. Around 18 tenant failures out of around 94 units. And again, actually pretty strong performance despite the negativity that has been coming through from that region.
Yeah, I mean, Chapel Field in Norwich is a really great case study for us. It was an asset that had a lot of tenant failures in the recession of 2008, 2009. We've brought in some great retailers, particularly the likes of Apple and Hollister, and suddenly it's really taken off, and 13% increase in footfall last year, strong rental income increase. So, that centre is performing really well.
You've also got a very strong pipeline of projects, David. We've also seen a combination of organic and acquisitive growth over the past while. What kind of growth are you penciling in or pricing into this year?
Well, we've got what we call active management projects. We've got £120 million worth of projects for the next 3 years. And then a pipeline of major projects. Where planning applications gone in for an extension at Lakeside. We've talked about Nottingham and other centres as well. So there's lots of organic growth potential within the business, and we certainly see the next couple of years when we don't expect the UK economy to be we expect low growth in the UK economy. We think it's just a good time for us to be positioning ourselves with a large pipeline of things to do for an improving economy.
Thank you so much, sir, for joining us. Great to have you on the programme.